Ever wondered what Wall Street is and how it functions? Well, let's demystify it together. Wall Street, named after the 18th century wall that once stood in Lower Manhattan, is not just a physical street. It's a symbol, a representation of the financial markets of the United States. It's where fortunes are made, lost, and made again, where dreams are realized or shattered, all in the blink of an eye. From its humble beginnings as a meeting place for 24 stockbrokers under a buttonwood tree in the late 1700s, Wall Street has grown into a global financial powerhouse. Today it is home to the New York Stock Exchange and Nasdaq, two of the world's largest stock exchanges. It's a hub of economic activity that influences not only the US economy but also the global economy. So, Wall Street is the heart of the financial world, but how exactly does it beat? Let's dive deeper. Scene script. Have you heard of the term pay for order flow? It's a crucial part of how Wall Street operates. Picture this. You're using a brokerage app to buy or sell a stock. When you hit that trade button, you might assume your order goes directly to the stock market. But that's not exactly what happens. This is where pay for order flow comes into play. In fact, your order is likely sold to what's called a market maker. These market makers are firms that stand ready to buy and sell a particular stock on a regular and continuous basis at a publicly quoted price. The broker receives a tiny payment from the market maker for this order. This small payment is called payment for order flow. It's a way for brokers to make money while still offering you commission-free trades. In essence, it's like a tip paid by the market maker to the broker for directing the order their way. But why does this matter to you? Well, some critics argue that this system can lead to a conflict of interest. They suggest that brokers might be incentivized to send orders to the highest bidder, rather than the market maker offering the best price for you, the investor. This controversy has led to calls for increased transparency in how brokers route orders and how they're compensated for them. So, that's pay for order flow. But who are these market makers buying your orders? Let's find out. Market makers. They're the lifeblood of Wall Street. But who are they? Well, imagine a bustling marketplace where buyers and sellers are constantly trading. In the middle of this chaos, there are the market makers. They're like the auctioneers of the financial world, always ready with a bid to buy or an offer to sell. Market makers are entities that quote both a buy and a sell price in a financial instrument or commodity. Their goal, to make a profit on the bid-offer spread. That's the difference between the price they're willing to pay for an asset and the price they're willing to sell it for. But they're not just about making profits. Market makers play a crucial role in providing liquidity to the market. By constantly buying and selling, they ensure there's always a ready market for traders and investors. Now that we know who market makers are and how they function, let's tie it all together. Wall Street, pay for order flow, market makers. How do they all connect? Puzzling, isn't it? But let me assure you, it's an intricate dance with each player knowing their steps perfectly. Let's begin with the market makers. They're the ones that provide liquidity to the market, buying and selling securities throughout the trading day. Now let's bring pay for order flow into the picture. This is a practice where brokers receive compensation for directing orders to specific market makers. It's like a tip given to the broker for bringing in the business. So the market makers and brokers enter a symbiotic relationship, feeding off each other to keep the market wheels turning. And where does Wall Street fit in this jigsaw? Well, Wall Street is the stage where this dance takes place. It's the epicenter of financial activity, where market makers and brokers, enabled by pay for order flow, play their parts day in and day out. But it's not just about these big players. By understanding these concepts, individual investors can navigate the market with more confidence. You see, knowledge is power, and in the financial world, this power can help you make informed decisions, potentially leading to better returns on your investments. And there you have it. The intricate dance of Wall Street, pay for order flow, and market makers, all working together to drive the world's financial markets.